What is going on, investors? Back again, another eventful week in the stock market. The trend continues, and that trend continues to be down, at least for the NASDAQ stock. The triple Q's down about 0.75% for the last 5 days. We've now turned negative for the 1 month view of about 1.82%. We're going to jump into the key stocks in this index. Amazon, Apple, Microsoft, Netflix, Google, and we'll throw in Tesla as well. And so full disclosure, before we get too deep, I own shares of Amazon, Facebook, Google, and Apple. And obviously all these stocks are kind of on a watch list for me, especially as we're seeing a pullback in price. This is an Amazon chart. Again, this trend was intact for a very, very long time, several months now. We retested this trend line several times, as you can see here. And then finally, when we broke trend. So if you're new to the stock market, when trends break, it is a powerful move. It is not something, as you can see, for the last 3 months, Amazon has been on a steady rise upward. But once it broke trend, it's not typically a good time to just jump in there and start buying. Now, if you want to buy, maybe buy one share or a half a share if we're talking about Amazon. But once this trend breaks, it is a powerful move. And as we see here, this green line right here that I have my cursor on, this is the 50-day moving average. And we're starting to see, look how this has been on an elevator shaft upwards. And now it's starting to flatten out and possibly turn negative, which would definitely be another bearish sign. Not only are you changing trend, but your 50-day moving average is turning negative as well. Our MACD is starting to bottom out. Our RSI is definitely near the bottom. I mean, Amazon has not seen an RSI that low. Now, Amazon has hit our price target. These lines I left mainly intact since my last week video on this. We hit that $2,900 level. This is where if you want to start a position in Amazon, you could potentially do that. Now, what you're rooting for here with Amazon is not necessarily a snapback up to these highs up at the $3,500 range. I think that has a low probability of happening. I think what's possible is that the market start trading in like a sawtooth triangular fashion. So basically trading sideways. I actually think that would be one of the better outcomes for the stock market, is if we kind of find some bottom for these stocks, they bounce up a little bit, come back down, bounce up. What happens in that time frame is Amazon and these stocks that tend to be a little bit overvalued from a traditional valuation metric can start growing into their valuation. So Amazon, anywhere in this range, 28 to 29, if you want to step in. Again, you've got to have a little bit of balls of steel to want to jump in here on a negative trend, negative moving average. But if you want to do that, I would tiptoe in. Again, if you want, say, 10 shares of Amazon, I would do it one share at a time, because if we break this level here, this downward trend continues, which I think is more probable than us bouncing back up to the highs, then this stock could come all the way back down into this $2,500 range. I think that is certainly possible. And I think we could certainly come back down here and retest these lows down at 2,000. Now, obviously the probability starts stretching out when you start talking about moves that large. But if I would have told you that this stock was going to be down to 3,000 a few weeks ago when it was at 3,500, people probably would have said I was crazy. So this stock is in a downtrend, but it's approaching a zone where you could potentially step in. But again, you have a negative trend and a moving average that is rolling over. I would play with caution here. Moving on to Apple, same situation here. We had this long trend line, and Apple's trend line actually was probably even more convincing than Amazon, because look how close we're trading on this trend line. Then we broke it. Then they had earnings and announced the stock split, and then boom, we've got a bunch of money up here, mainly retail investor money that's getting stuck up in these ranges from call it 140, 135, all the way back down here to the 115, 119 range. This stock, again, broke trend and broke it relatively convincingly over the last week or so. Now, we have our 50-day moving average here. We closed below it. Notice that Amazon did that as well. And once Amazon closed under this 50-day moving average, it continued to move down. Apple today finally closed under this little light blue line is the 50-day moving average. We closed below it today. And so I actually would expect Apple to trade inside this box that we had. We've had this 100 to 110 price range marked out for Apple for several weeks here, at least for several videos that I've done on Apple. So I like this range. Again, I would tiptoe in here. If you want 10 shares of Apple, I would buy 1 share at a time in this range, because what I think could happen is we could hit this range. Yes, we could bounce back up. But again, what I talked about is we have a lot of trapped money, a lot of people feeling like, oh no, I'm never going to make money on Apple. As this stock moves back up, it'll likely make a bounce at some point because our MACD's oversold, or RSI's oversold. This stock will bounce back a little bit, but these sellers are going to step in and keep a lid on the stock. Notice we're also making lower highs on a daily chart here. That is also a very bearish sign. Also, this trend line, this 50-day moving average, is starting to flatten out and possibly rolling over. That would be a very bearish sign. We see last time this trend line rolled over, this stock made a big move downward, went from about $75 a share all the way down to $56. That's a $20 move here, and I would actually consider that to be about the same. Now, I think this $100 level will be a psychological level with Apple. It probably will bounce, I think, pretty hard off that $100 level. If for some reason we were to break that, I think we're coming all the way back down to 90. The probabilities stretch out there, but we're in a zone with Apple. If you want to step in here very gingerly, it's possible. Microsoft, a little bit different situation. Like we talked on last week's video, we had a trend line with Microsoft. It broke early, and now what I think is happening with Microsoft is we're probably going to be in a sideways action here with Microsoft. You might come back up here to these highs or close to them, 220 range, maybe 215, somewhere in there. But notice that we've kind of been creating that sawtooth action with Microsoft. I actually think that is not necessarily a bad thing. If you want to trade this like sideways action, that is fine. But I think we could, and if you want to stretch it out down here, we're kind of in this sideways action. We're right on the bottom of that range, right at that 200. If you want to step in with Microsoft, I would do it very gingerly because we're on a downward trend here. And I think if it breaks this $200 mark and we start closing below it, I think we could easily come down to the 180, 190 range with Microsoft. But Microsoft is actually doing what I think Apple and Amazon will eventually do here in a couple weeks, is that is traverse sideways, which is not necessarily a bad thing with overvalued stocks. It gives them time. Most of these stocks report earnings in about 30 or 40 days, so it allows them to maybe catch up with their valuation and those types of things. That's just something that you want to keep in mind. Do I see this stock snapping back up to these highs? Probably not, because again, you have some money that's trapped up here. As this stock moves upwards, back up to these levels, these sellers are going to want to step in and potentially sell. So that's Microsoft, not looking terrible. Netflix was one I was pretty bearish on the last video. It did confirm that. It continued to move down. In fact, it kind of gapped down here the last few days. It is definitely within a range where if you want to step in again with Netflix, you could potentially come in here between this 455-ish up to where it's trading at today, right at that 470 range. If you want to step in with Netflix, I think we're in a range. But again, we created this big trend line. Once it broke it actually broke down here and then popped back up and then broke back down. That's why with Netflix as well, we're probably going to be kind of in a sideways box as well with Netflix. I think we're going to kind of traverse sideways in this box. I actually think that would be the best possible outcome, because the worst possible outcome is, especially if you're long these stocks, is that this trend continues and it continues down and we retest lows like with Netflix down here at 400 or all the way down here at 300. And so that's obviously the catastrophic outcome. I think the best possible outcome if you're long these stocks is that they go sideways for a little while. Now on to Google. Google had this trend line. It's not the best trend line because we loop way above it and then kind of come down here and touch and then loop and touch, because what you could do is just slide this trend line up maybe up in here, and then it's, breakdown, up, breakdown, back up. So that's potentially what's going on with Google. Although the stock itself seems a little bit weaker than some of the other FAANG names. We see now, here's our 50-day moving average, this light blue line. Once we closed under it here, we gapped down, and then now we're in this range where if you do want to accumulate Google shares, I think we're in a range where you could potentially do that from where it's at right now at the 1450 range all the way down to 1400. I think would be a little bit more attractive. Okay, so we could again be in a box with Google. We could trade in this range between, maybe call it 1550 down to 1400. I could see us chopping around in this range with Google. On to Facebook. Facebook chart looks almost identical to Microsoft, in my opinion. We had this trend line, and then once it broke, it retested a few different times, but kept getting rejected. And so now you could say we're kind of now forming these different waves out here. Notice our 50-day moving average. The last video I posted, we were sitting above it, but this stock, like the other ones, has now broken below the 50-day average and now has closed below. That's not a good sign. Our MACD's rolling down, our RSI is bottoming out as well, but this trend line's starting to turn negative. Again, like all these stocks, Facebook is now deep in a range. I actually had a range here where if you wanted to step in early, it wasn't a spot where I'm going to step in because I'm pretty overweight Facebook. The first point where I would potentially buy Facebook is at this 240 mark. So we're still a ways away from $12 a share away from there, which is not much. It could definitely get to this level by next week if things continue to be bearish in this market. I think even better than that is down here in this 210, 215, even maybe $200 even range with Facebook. That's probably where I would step into this one because I'm already fairly overweight Facebook. But again, we've got a negative trend here. We've closed under the 50-day moving average. All of this is not a good sign. Now, finally, Tesla. Tesla's in a completely different range because notice we had this downtrend with Tesla, but it bounced off this 50-day moving average. It was very briefly in a range where if you wanted to buy Tesla, I think this was a great time to buy it. And it bounced really hard, like a basketball off a hardwood floor. It bounced. And so this is not what the other stocks. So if you think maybe Apple and Amazon and Microsoft and Netflix will mirror what Tesla is doing, I don't think that's necessarily the case. Tesla kind of trades in its own environment. It's a little bit more speculative stock, and it definitely came further down from the highs, and I think naturally it's going to bounce a little higher from the lows. Now, what I think is probable with Tesla is we come back all the way up here and retest these highs. I think it's possible we retest these highs close to the $500 range. We're about $30 or $40 a share price away from these highs. I think it's potential because we're actually in an uptrend. This 50-day moving average is back in an uptrend. We haven't like restarted an uptrend trend line, but this stock is performing a lot stronger than the other shares. We're almost crossing over like a nice bullish crossover on the MACD. You see what happens here when these lines cross, the stock likes to keep going up. I think this stock likely comes back up here, retests these highs, but probably will come back down, and I think trade in a sideways motion again. I think still if you want to target Tesla shares, I think you can continue to be patient. I think they come back down to earth at some point. When that is, I don't know. It's anybody's guess. But at this 340 range, I think what you can do with Tesla is actually step in a little bit earlier because everybody's going to have their eyes on these same levels. And so maybe you can step in a little early, follow this 50-day moving average. For example, if this stock came back down to the, call it 360 range, I think that would be an interesting buy because we bounced off this 50-day moving average. So that's Tesla, Netflix, Microsoft, Facebook, Apple, Google, and Amazon. Interesting week in the stock market. We are in a downtrend, which we haven't seen in a while. We'll see how long it lasts. Leave me a comment below. Let me know how you're trading this whole thing. Good luck with your investments.